market's still under pressure, but better off than the morning, slightly better off, you can say. The sector that we're putting the spotlight now is the auto space. We have with us Deepak Jain, who's joining us from the sidelines of the IDFC Securities Annual Investor Conference. As we told you, he tracks the auto as well as the auto ancillary space. As we get chatting, just a quick update on some of the stocks that are under Deepak's coverage. They have a positive view on Mahindra & Mahindra, positive on Motherson Sumi, actually even an outperform on an Eicher Motors, and they have a neutral stance on Ashok Leyland. So these are some of the stocks. The details will come up on your screen in just a minute. Deepak, it's an interesting sector, and it's one that has been beaten down very, very severely in the last 3 odd months. November, the green shoots of recovery seem visible again on the stocks. But do you think the auto space has seen the worst in terms of price action?
So, there have been a lot of macro issues with the sector in that sense that you had fuel price hikes, interest rates moving up, the NBFC crisis, and probably rainfalls not being as, spatially correct as we would have liked it to be. So there have been some pressures, and that's been seen in the festival season. But having said that, the stock price corrections have been really sharp as well. So in my view, I think at this stage, it probably takes into account most of the negatives that we've had. To take into account also the fact that the negatives that we talk about, fuel price hikes, interest rates, a little bit of regulatory issues in terms of insurance, etc., the impact is likely to be transient in nature. We don't expect that to, maybe in the next 3 months to 6 months, we will probably expect most of the demand scenario to improve considerably on that front. So, yeah, it's an interesting space. There are some areas where we would continue to remain positive. There are some areas which could see some more pressure, I think. But on the whole, the worst is probably behind us.
Okay. Deepak, afternoon. Let's talk specifically about Eicher Motors, because that's led the recovery in the month of November with a rally of close to about 11%. The two launches, the twins, Interceptor as well as Continental GT, can it increase the company's revenues and volumes significantly? And how do you see it with respect to the competition from Java?
Okay, so if I look at Eicher, first about the twins. So the twins have received a great response. The reviews that we've seen, we've spoken to some experts, and this is probably the best RE bike that you've seen till now, in terms of all the issues. There were some issues with the RE bikes, and I think this sorts most of them out. Plus, importantly, it gives an upgrade opportunity for around 25 lakh RE customers or something like that, which are on the road, which are currently driving an RE. So for the first time, it offers an upgrade. So I think, yes, the initial response being what it is, it seems that it could be a volume driver to some extent. But more importantly, or equally importantly, is the fact that this could also be a revenue driver. The realizations are fairly higher, than a typical products, around 70-80% higher than the 350cc. And I think to that extent, you could probably continue to see a divergence between the volume growth and the revenue growth for RE. So even in this quarter, we saw realizations move up 7% YOY. And I think that is a trend that could continue. So the products are fabulous. From what I've driven them myself, and I find them fabulous over there. Secondly, with respect to Java, I haven't seen the bike as such, but the reviews are fairly, nobody's driven them if I'm right. But Java has the potential to challenge RE probably. But it's still very early days in the sense that they don't have a distribution network which is in place as of now. The product is untested. So there are quite a few steps, I think, before Java can actually become a competitor to RE in a real sense. But does it have the potential? I think it does. Now, if I look at it from a stock perspective, Royal Enfield or Eicher as a whole, it's come back from its extreme lows. There have been some pressures. There was a strike at the factory. I think that's behind us. The volume growth is probably not as strong as what would have been expected, and that's in line with the industry as a whole. But what we understand is that the last month has been fairly strong, especially in terms of the retail sales. The wholesale volumes could take some time to come through, but the retail sales have been fairly strong on that front. So my sense is that at these prices and these valuations, it takes into account. It doesn't take into account rather some of the upsides that you could see from the 250s, from the 650 cc's, as well as the price increases that they've seen on that. So realization will probably be the key on that.
Okay, let's see how that battle of the bikes really plays out. But you have a positive call on Eicher, so we take that on board. The next really interesting stock, Deepak, we have to talk about Maruti. And everyone's wondering if 6,500 was indeed the bottom. I mean, if it's just sort of going to hold or not. And I was reading some reports. I mean, this company is actually ramping up volumes of a model like the Brezza. I think the production, they've hiked up by about 10%. So, you know, what we've seen, this lull around the festive season, do you see this as a one-off? What is the kind of monthly run rate in terms of units that you're penciling in for Maruti, and your call on the stock?
So, you know, as I said, the sector as a whole has faced some issues, you know, in terms of fuel price hikes, interest rates, and all those macro issues that we've just discussed. And that does impact all companies, including Maruti. So the festival season, you know, for the sector as a whole has not been strong. And I think that was being reflected. Maruti also faced some pressures on account of the currency movements, which are going to probably get reflected in Q3 over the, you know, in the next quarter. Especially, you know, and part of that is reversing now with the rupee coming back a little bit. So there are some pressures on that. Having said that, do I see this continuing for a very long period? The answer to that is a clear no. I think you'll see a comeback in volumes. Along with that, you know, if I look at Maruti from the longer term perspective, it's clearly got, you know, its structural advantages are just increasing. So its distribution, the understanding of the consumers, of the Indian consumer specifically, and possibly, you know, the fact that incremental competition is not rising at a very fast rate. So taking all together from a slightly longer term perspective, Maruti does look good. Yeah, they're ramping up production in select models, and I think that augurs well from them. So I think we're penciling in around 165,000 units per month for the remaining part of this year for Maruti. Yeah.
Okay. Deepak, I have to ask.
I would, you know, I think we've probably hit the bottom, yeah.
Okay, hit the bottom for Maruti Suzuki.
That's
what
right.
about Ashok Leyland? You know, Vinod Dasri's contribution has been well known. He was instrumental in making Ashok Leyland the second largest truck maker in India. And he's resigned 2 years before his term ended. Can the company and the stock and the performance take such a resignation in its stride?
So it depends on the next steps that I think, you know, in terms of what the succession that comes out. I think if it's going to be, you know, from an investor perspective, if you know, Dheeraj Hinduja is going to continue for maybe as a transition period, as he's highlighted, then I don't think the concern should be too long, you know, in that sense. Ashok Leyland, I'm a little more concerned on the fact that on the you know, the longevity of the CV cycle that we have right now. There are concerns, I think, in terms of freight rates not moving up in line with petrol or with diesel prices. We've seen some concerns, and also, you know, in terms of probably the collection days, you know, on the ground that we sense is probably the collection days from financiers is probably increasing just a tad bit. Along with that, the NBFC liquidity part could, in the automobile sector, it could probably hit the CV space. So if I take all of them together and pencil in the fact that we've seen a very high, very long CV cycle now, I think it's the fifth year if I'm correct, you know, you could probably see a peaking out of the CV cycle. So my concerns are, you know, one, we have to see on how the succession takes place, but also on how the CV cycle plays out. I would be a little more cautious on the CV cycle, and hence, you know, the sort of neutral rating that we have on Ashok Leyland.
Okay, we have only 20 more seconds left because we've overshot time. But just very quickly, you are positive on a stock that has been struggling. I'm talking about Motherson Sumi. Results were nothing to write home about. Trade war talk is still on. We don't know what's happening with global auto tariffs. What makes you optimistic on Motherson?
So yes, as we've been highlighting also, you know, that there are near-term concerns, and there's no question about that. I think globally there is a challenge in terms of growth, and Motherson, you know, the Motherson store plants are coming on stream at this point in time. So yes, there is a near-term concern. What makes me more positive on Motherson is, again, it's longer term in terms of the fact that they've made acquisitions at the right time and have been able to turn them around. We know that they have that capability, and, you know, if they're able to do that with one acquisition at any point in time, that turns it around completely for Motherson. Also, they are continuously actually being able to increase their contribution per vehicle, you know, in that sense. That's longer-term strategy still plays out. But yes, I completely agree that, you know, the near-term, there are pressures on Motherson from a global perspective, and, you know, and it's coming at the wrong time for them, honestly.
Okay, we'll leave it at that. Any disclosures?
Okay. No, I don't own anything.
Okay, thank you very much for that. And news coming in, ITI, the telecom equipment maker, has filed the DRHP with SEBI as a part of the FPO. They will offer 18 crore shares to the public. The stock has been buzzing since yesterday. Even yesterday, it had a double-digit up move. But this is some, fresh supply which is going to actually come through. But let's talk about a few more stocks. UPL is buzzing in trade on the back of the company announcing an acquisition of a Costa Rican company, IBC. Sonal joins in with the details. Sonal, is this a significant acquisition for the company?
It actually is not, Reema. It is not a big acquisition. The total revenues of this company are around 120 crore rupees. And this amounts to only 0.6% of total UPL's revenues right now. So on that scale, it is not that big an acquisition. If I just talk about what the news is, through its wholly owned subsidiary, UPL has acquired 100% stake in IBC. And this company is in business of producing and selling crop protection products. But the good part is this company is into niche products, something like crops like banana, coffee, sugar, and pineapple, into which UPL is not already there. So it gives access to a niche product portfolio to UPL. Right now, 17% of the revenues of UPL come from the North American region, 32% comes from the LATAM region. So overall, in that picture, it is a small acquisition per se. They have not actually given us the cost of acquisition, but the word on the street is the acquisition is at around $30 million. And this would mean the acquisition is at 5 times EV to EBITDA, which looks very reasonable considering the recent acquisition that UPL did of Arista was on the higher side. So overall, the valuations are reasonable. This will add 120 crores to the top line. So it is a mild positive for the company.
Okay, all right. So that's UPL stock on the move. Thanks, Sonal, very much for the update.
Actually, another stock which is on the move is Adani Gas. It's locked in an upper circuit of about 20%. The company's made an announcement to the exchanges where they've said that Adani Gas has expanded its pan-India city gas distribution presence. They've bagged 13 CGD projects, which will now make it the largest private city gas distribution player in India. So they've bagged 13 projects in the recently concluded 9th round of bidding which took place. In addition, the company has also won 9 geographical areas in its joint venture with Indian Oil Corporation. So that's the news on Adani Gas. It's up 20%.
But, Reema, that was already known. That was largely known that they have won all these geographical areas. So this is not an incremental news that we are seeing. But I don't think that could be the reason for this 20% uptake that we saw on Adani Gas.
For Adani Group stocks, many times you don't have reasons about how they move and why they move, but 20% circuit is what you have.